Let's talk to Jubril Karim, who is an energy analyst with EcoBank, to get his perspectives on the market and, of course, predictions by the International Energy Agency. Good morning to you, Jubril.
Good morning. Thank you for having me.
Welcome back from your vacation. Now, we see oil demand growth reaching about 1.3 million barrels per day. That's according to the International Energy Agency. And they're projecting that we're going to see for the second half of the year an improvement in the oil markets. Give us your thoughts on this.
Well, the projection by the IEA is that for the first half of the year, we've seen an improvement in global oil demand. Global oil demand growth, actually. So from about the expectation of about 1.3 million barrels per day to 1.6 million barrels per day, bringing total demand to about just above 95 million barrels per day. And on this demand side, it's quite impressive given the outlook for most economy in 2016. It has not been a very good outlook in terms of economic growth, which is a major driver of energy demand across the globe. But on the supply side as well, what has which has been what has affected prices in recent times, we've seen some significant decline in production from certain places, including Nigeria and Canada, and also the fact that Iran is not ramping up production at the rate at which the market expected to. Expectation were that Iran was going to increase production by an additional 1 million barrels by 2017, but now that projection has been reduced to about 700,000 barrels per day. And also, during the we also have a wildfire in Canada that took out about 1.5 million barrels per day out of the market. That is being restored now. But the only all those are short-term. All those are short-term dip in supply. On the long-term side of it, things, we've seen that project costs across the United States have seen a drop of about 500,000 barrels in production on year-on-year basis in the U.S. This is largely due to projects being dropped due to low oil price by shale oil producers. And expectation are that into 2017, we're still going to see a further reduction in production in the U.S. as additional projects are being shed due to low oil prices. But all in all, for oil price, the current dip in supply that is being experienced in Canada and Nigeria are expected to reverse towards the end of the year, and by 2017, those production are expected back online. But from our own side here, we think it's much more conservative to believe that production in Canada will be much earlier than projected. But as given the Nigerian situation, it's quite an unpredictable situation right now. Although we have seen a reduction in terms of vandalism, but production currently stands at about 30 years low, which is quite unfortunate for Nigeria right now. So while so many stakeholders are quick to push out that oil prices are recovering and that might be good for Nigeria, they forget that the reason why oil prices is actually recovering is because of situations in Nigeria as well.
That's very true, Jubril. But then, you know, taking a look at, you talked about Nigeria, you talked about Canada. Libya also is also in the news, experiencing some kind of shutting in production, and that's also given the rise that we're seeing to oil prices. But right now, Brent crude is actually trading at $49.29 a barrel. Now, if, for instance, the federal government is able to dialogue and actually resolve the issues with the with the Niger Delta Avengers and the other militants who are actually, you know, vandalizing all of the assets, we probably will see a ramping up of production. How would this improve our market share?
Okay, here's the thing though. When it comes to the issue of vandalism in Nigeria, two factors we have to watch out for. First is the agreement with the militants, which would eventually put a stop to vandalization. Then we have to now talk about the timeline for repair work to be carried out on facilities that have been vandalized. So it's not a case of we have an agreement being reached between the government and the Niger Delta Avengers, and we begin to see a quick recovery in production. Those facilities need to be repaired. and they will most likely take a long period of time. In terms of market share, of course, there has been concern from major buyers of Nigerian crude now regarding delivery by Nigerian producers, because it's quite it will not be very reasonable for a producer to be demanding purchasing crude from a supplier who is operating in a very erratic region. So that has affected Nigerian market share. But put that together, if we get it right and we begin to see a much more steady output of crude oil, I believe that Nigeria still have its market share, but it has to be wary of other countries that are pushing production into the markets now, including Iran, most importantly Iran, because Nigeria and Iran seems to have a lot of common buyers, and this needs to be watched by the Nigerian producers.
Now, the report still by the International Energy Agency is like is speculating, or is quite certain that there's going to be an increase in demand from non-OECD countries. Yes. Could you talk a little bit more about that?
Well, the non-OECD countries are countries out of, most of the OECD countries are much more developed markets. So what they're projecting is actually that demand will increase in in some emerging markets and that are non-OECD. So we're looking at Southeast Asia, we're looking at some in the Middle East as well, and all across other regions in South America as well. So demand from all these regions are expected to rise in 2017. But what Outlook is also showing is that most likely supply is going to match up with that. But we are expecting that the excess supply in the market will be significantly reduced in 2017, which has prompted a lot of analysts to projecting oil price range of between about $50 and $65 to $70 a barrel for 2017. But all in all, we think the optimism that was being projected at the beginning of 2016, that by 2017 we'll begin to see a much more rapid recovery in oil price, is not so anymore, because we've seen that while we expect an increase in demand, supply is also not reducing at the rate that you would have expected.
Well, thank you so much, Jibril, for joining me on the program this morning, and of course shedding more light on those issues and sharing your perspectives with us.
Thank you for having me.